probably consider for me, my tactical asset allocation is a 60-40 allocation in terms of in favor of fixed income. I call this, I'm an aggressive investor. I'm a long-term investor, so I consider myself aggressive. I have a 60-40 asset allocation strategy. But as you can see, I have a very large money market now, 30%, and a bond of 30%, so about 60%. I don't usually do 30% money market because very low yield. But this time, because of volatility, good time to consider a big part in money market. And then diversify in global equities with 10%. And domestic equities keep about 30%. That's tactical, means depending on the times, diba? We have a long-term strategy, which is a strategic strategy. Short-term strategy, maybe 3 to 6 months, tactical allocation. Now, if you are, if you have less risk appetite than I am, maybe you're like a moderate investor, a portfolio of about 70-30 mix could be ideal. 70% fixed income, 30% equities. Now you have a bigger portion in money market of 40%, bonds of 30%, also global equities. Start looking at that, global investments, and 20% domestic equities, more of a balanced portfolio. Ganyan. But for the more conservative investors out there who can't seem to be comfortable seeing all of this volatility, an 80%, 20% mix can be considered, with more in money market at 50% and bonds at 30%. But still leave some for local equities at 15% and slowly diversify in global investment at 5%. Diba? A portfolio like this will substantially minimize the volatility of your portfolio. Remember, guys, these are just my tactical suggested strategies given today's environment. As we know, investing is really for the long term, but regular rebalancing to fine-tune portfolios is needed to align with where we are today and also where you are in your investment journey. As we cannot really predict exactly where markets will go, implementing these strategies using a peso cost averaging approach is really recommended. So that is buy regularly and do it on a monthly thing.